Redfin just issued a big warning. A record number, 40,000 home buyers walked away from purchase contracts in December. And so today on the Housing Nerd, we're going to look at what's happening with home buyers. Why are they walking away from contracts? And what's really going on with the overall health of the housing market? Hey, if you're new to my channel, welcome. My name is Jason Farrier. I've been a realtor and investor in Central Ohio for the last 7 years. I appreciate you joining me today. We're looking at this article from Redfin that talks about home buyers walking away from purchase contracts. Then we're going to look at the latest Redfin weekly update, and it covers national numbers. And third, we're going to look at specific markets, including Ohio. I always do Ohio because that's where I live. I'm doing California because we want to kind of look at what's been going on with those wildfires out there. They're just horrible. But this article talks about the home buyers walking away. And I thought this was just insane and had to share it with you guys. Pending home sales dropped 4.5% from November as mortgage rates jumped to the highest level in months. Roughly 40,000 home purchases were called off in December, equal to 16% of homes that went under contract. That's the highest December percentage on record, meaning 40,000 people were in contract to buy a home. And in that process, they figured out for some reason, either one, they couldn't afford the payment. Two, they decided they didn't like the house. Whatever you call it, they decided we're out of here. We're canceling the deal. Mortgage rates reversed course halfway through December and have been rising ever since, in part because the Fed projected fewer 2025 interest rate cuts than anticipated. The weekly average 30-year fixed mortgage rate now sits at 7.04%, the highest level since May, after hitting an early December low of 6.6%. Nearly 40,000 home purchase agreements were canceled in December, equal to 16.2% of homes that went under contract for that month. That's the highest December percentage in records dating back to 2017 and is up 15% from a year earlier. Wow. Here's a chart showing how often home purchases are falling through, meaning buyers are just walking away during the process. And you can see back in 2017, we were just over 10%. We actually spiked in, rate during COVID when it started, to over 16%. But then, and we spiked a couple more times, but then now look at this 16.2%. So, and it's going up. The trend you can see is going up. More and more people are walking away from the purchase contracts. Comment below. I want to know why you think people are walking away. Could it be home prices are outrageous? Could it be that interest rates are elevated compared to recent history? And when you combine all that together, you got a really unaffordable house a lot of times. Could that be it? Comment below. Let me know what you think. All right. I'm going to skip down to another section here before we get to the weekly update. They say home buyers pumped the brakes when mortgage rates ticked up and are now in wait and see mode, said Jesse Landon, a Redfin premier agent in San Antonio. Everyone's just trying to figure out when rates are going to come down again. In the meantime, a lot of house hunters are opting to rent. So are you someone, I want to know, are you someone that is out there looking at a house or has been looking at a house over the past, few months, maybe year, and now you're like, you know what, I'm just going to rent? I'm getting a lot of comments on my channel that people are like, you know what, I'm not looking at a house right now. I'm on the sidelines. I'm just going to rent. Comment and tell me if that's you and why you're renting. So the name of this Redfin article is High Housing Payments Are Slowing Home Sales, but Buyers Could Get Relief Soon. Could they? I don't know. They talk about the median monthly housing payment as a big reason why sales are slow. No duh, right? So the median monthly housing payment is $2,686. That's the highest level in 7 months. Just nuts, right? Like it's crazy that monthly payments have gone, up $1,000 in just a few years. And most people now can't afford the 2686, the median payment, to buy the median house. The weekly average mortgage rate is 7.04%. That's the highest level since May. And the median US home sale price is up 5% year over year. But it looks like that home appreciation may be slowing slightly. More on that in a minute. High housing costs are one factor keeping many would-be buyers on the sidelines. Comment below. I want to know if that's you. Are you like, houses are too expensive, I ain't going to buy one right now? Pending home sales are down 10% annually. That's the biggest decline in more than a year. And Redfin's home buyer demand index, it's near its lowest level since June. Homes are also selling relatively slowly. The average home is sitting on the market 52 days. That's the longest span in 2 years. Other factors pushing down pending sales are extremely cold and snowy weather in some parts of the country and the wildfires, obviously, that we've had in California. But I mean, in Ohio right now, like where I am today, it's freezing out. I mean, it's been a couple days ago, it was actually like -6 or -7 when I woke up. That's cold even for Ohio. So the market is probably slow somewhat because of the weather and the wildfires, but that can't be all of the problem. I think a lot of the problem is home prices are high, taxes are high, insurance is high, and home payments are high because interest rates are still elevated compared to recent history. All right, now they talk about, what good signs there are out in the housing market as a buyer. There aren't many, as you can tell. There are signals home buyers could get some cost relief soon. Daily average mortgage rates started coming down last week after a softer than expected CPI report. Redfin economists expect rates to decline more if President Trump continues to signal he will be less aggressive on tariffs than expected. And sale price increases may be losing momentum. The 5% year over year increase in median sale price is the smallest since October. So maybe prices are softening. Then they talk about the Los Angeles wildfires. Obviously, a horrible, horrible situation. I'm not going to go into the whole section of the wildfires, but I am going to talk about this last paragraph here because I thought this was nuts. This Redfin agent says, I'm focused on helping families displaced by the fires find short term housing, which is challenging because rentals are moving at an incredibly fast pace, said Eric Miles, a Redfin premier agent in Los Angeles. I took one family from the Palisades to see a rental listing in West Hollywood last week, but it had already received 10 offers. The person who won signed a 3-year lease. Thankfully, that same agent had another rental in the area, so I took the family to see it immediately. It had 35 offers, sight unseen, but my client's in a position to get it because they had to see it in person. Comment below, what do you think about these California wildfires from a rental standpoint, even a real estate standpoint? And please do me 2 favors. Like this video if you get any value out of it and subscribe. I'm putting in the work. All you got to do is subscribe. Not that hard. All right, now we're going to go into the leading indicators. And this is where they talk about the top line metrics for supply and demand. And this is really important, folks, if you want to understand what's happening with the housing market. So, again, first, all about national numbers, then we'll get into some local areas. The daily average 30-year fixed mortgage rate, 7.08%. That's pretty close to where it was when I checked it yesterday on Mortgage News Daily, but no doubt mortgage rates are sticky around that 7% number. A lot of people thought they would crash. A lot of people are waiting for, prices and rates to come down. Mortgage purchase applications, that is a good indicator of demand because you had to put a purchase application in to actually get a mortgage. That's up 1% from a week earlier, but it's up only 2% year over year. So buying demand is just kind of stagnant, has been for a couple years now. As an agent, as a realtor, I can tell you buying demand is definitely slow compared to a couple years ago, even slow compared to pre-pandemic levels. Okay, Redfin Home Buyer Demand Index, that's their proprietary way of tracking overall buyer demand. It's up slightly from a week earlier, but it's still its lowest level since June. And you can see it's up 7% year over year. So Redfin saying, hey, there is a little more buying demand than there was last year and a little more compared to last week. Now we're going to look at the key housing market data from Redfin's latest update. And this is an aggregate from the top 400 metros across the US. So it kind of gives you a picture of what's happening in the biggest metros across the United States. Median sale price, the house in the middle, the one that sells in the middle, that's $378,000, up 5%, smallest increase since October. Home prices, the growth isn't accelerating like it was a couple years ago. Maybe that's softening more. Could we see a drop this year in median sale price? Many hope, wish, and pray for that. A lot of people have been predicting it for years. Hasn't happened yet. So, median asking price. I didn't highlight this, but that's gone straight up $394,000. That's up 4.6% year over year, meaning the median price, asking price of that house in the middle, people are now asking 4.6% more than they were last year. Median monthly mortgage payments up 7.6% year over year, meaning home prices are up. We know that. Mortgage payments, the median payment is now $2,686 at a 7.04%. So the moral of the story is if you've been continuing to wait for a housing market correction in order to buy, right now, homes cost more and the monthly mortgage payment is higher than it would have been if you purchased last year. Pretty crazy. Pending sales, 51,000. Only 51,000 houses went into contract. That's down 10% year over year. Biggest decline since October 2023. Nuts. New listings. How many houses are actually hitting the market? I got news for you, folks. This is not good either. If you're waiting on a housing market crash or price correction, you need more new listings. Right now, not getting a lot. 2.9% down versus last year, 54,982. Just not a lot of new listings. Because of that, active listings are now up only 8.8% year over year. That's the smallest increase in nearly a year. 859,000 units. Let's scroll down here and look at some home buying demand signals. Median days on market, 52. That's 6 days higher than last year. It's the highest level in 2 years. Homes are just taking a lot longer to sell, even though there's not a ton of them out there to actually buy. They are sitting on the market longer a lot of times because they're priced too high or they're destroyed or they need a bunch of work. And a lot of times right now, people just don't want to take on that type of project. Share of homes sold above list price, 21.3%. That's down from 23%. Average to sale price ratio, 98.1. That's essentially unchanged. So people on average are paying 98% of the final list price. All right, so now we're going to look at some metro level highlights. This talks about basically the best and worst housing markets when it comes to various pricing and inventory levels. So median sale price, where median sale price is growing the most. Milwaukee, Wisconsin, Pittsburgh, PA, Newark, New Jersey, Fort Lauderdale, and Anaheim, California. That's where sale price is growing the most. Look at Milwaukee, 16.9%. That means a home right now in Milwaukee, the median sale price for a house is nearly 17% higher than it was last year. Nuts. You think Florida's crashing? Look at this. Fort Lauderdale up 12.1%. Comment below if you live in Florida. Is this real data or are we just being hoodwinked? Metros with the biggest year-over-year decreases in median sale price. San Francisco, Austin, Tampa, Denver, San Antonio. I highlighted declined in 5 metros because this is usually just one metro. Usually they say 0 metros, 1 metro, 2 metros had a year-over-year decline in median sale price. Now they say 5. So maybe we're starting to see a change in a lot of areas throughout the U.S. We'll have to see. Pending sales, where houses are going into contract the most. Pending sales up in 1 metro, 7.5% in Portland, Oregon. Every other metro, 49 metros, because they use the top 50 metros for this section of the data. It increased in only 1 metro. So 49 metros actually had lower pending sales right now than they did last year at this time. Crazy. New listings, Phoenix, San Jose, Seattle, Sacramento, Portland, that's where new listings are hitting the market the most. Where are they declining the most? Newark, Detroit, San Antonio, Warren, Michigan, and Atlanta, Georgia. It increased in 18 metros. So that means 32 metros out of the top 50 metros had lower new listings, had fewer new listings than they did last year in most metros. This is the chart that shows you what's going on with the median sale price from a graphic standpoint. You could see it's starting higher than last year. We ended 2024 higher than 2023. Comment below. Tell me if you're surprised median sale price hasn't crashed like a lot of people wanted it to. I mean, if you talk to Reventure Consulting, which I never have, but I would guess he would think prices would have crashed in 2020, 2021, 2022, 2023, 2024. One day he'll be correct. So far, not, hasn't crashed. Look at the inventory, Nick. Get into the housing market. You'll understand. All right, here's median sale price. This is a graphical representation of what's going on with median sale price. You can see hasn't crashed yet. We ended 2024 higher than 2023. Comment below. Tell me if you think median sale price will crash this year. On this Redfin chart, will we end up lower than 2024 by the time 2025 is done? Median asking price, what people are asking for houses. Look at that straight up. People were just asking more than they were last year, the year before that. Just how it is. Will they get it? That's a different story. Home buyer housing payments up 7.6% year over year. Straight up in the air, right? Look at that. Well, it costs a lot more to buy a home now than it did this time last year, the year before that, and the year before that. Basically, meaning if you've been hoping, wanting, wishing for a crash in order to buy, that hasn't happened yet. You're still waiting, and now you're paying more than you would have the last 4 years, unfortunately. Pending home sales, where homes are going into contract, that's a 4-year low right now. If you talk to a realtor, title agent, probably realtor for real estate photography company, home inspector, they're probably all going to say the same thing. Business is off, no doubt. New listings of homes for sale down 3% year over year. Again, memo to Crash Bros. Like, you got to have more new listings. Now, people will say this is fraudulent data. So again, I ask them, where are the new listings if this is fraudulent? Meaning, if there's like triple the new listings that they're reporting, I want you to tell me where they are so I can go buy them. Because where I live, the only listings I can find are the ones that are actually reported in the data, not fake hidden listings that are just in your head. Active listings of homes for sale. Same story. Look at this thing drop. We aren't skyrocketing. We're threatening to go under last year's active listings for this time, for this time of year. I mean, look at that. It's headed straight down, not headed up. So if there was a ton of distress in the market, a ton of people pulling the fire alarm and saying, I got to sell, I got to sell, I got to sell because of economic turmoil, wouldn't you think that active listings would be higher? Comment below. I would. 5 months of supply available on the market. This is months of supply. Now, this is going straight up because homes are sitting longer. The few homes that are listed, the ones that are great, are selling. And if they're priced right in good areas, especially if they don't need a ton of work. 23% of pending sales under contract in 2 weeks. That's a 4-year low, meaning homes are just taking longer to sell. Homes sold in median of 52 days. That's a 4-year high. Same thing. Homes are just taking longer to sell. 21% of homes sold above final list price. Unbelievably, we're actually up higher than 2023. So homes are actually selling on average. We're selling more homes are selling above final list price than they did back in 2023. That surprises me. Average homes sold for 98.1%. Average home sold for 98.1% of final list price. You can see here, that's actually higher than 2023. That's crazy, and just slightly under 2024. Right now, buyers are getting about a 2% discount. It's a lot better than it was back in 2022. Look at that, 102.5, meaning on average, homes were selling 102.5% higher than they were listed for. That's crazy. Redfin Home Buyer Demand Index. I don't pay a lot of attention to this, but basically it's, I guess, down compared to 2023 and 2022, but they're saying it's up compared to this time last year. I guess according to Redfin, there's more buyer demand than there was this time last year. I don't see it, but Redfin claims it's there. Okay, now I'm going to look at a few markets. I'm going to dive into some metros here. And if you have a metro you want me to analyze on one of these videos, put it in the comments below and I'm happy to do it. I always start with Columbus because that's where I live, right outside of Columbus, Ohio. And I always start with new listings. So we're going to do new listings, we're going to do active listings, and then we're going to do median sale price in a few different markets. So you can go here just like I'm doing. I'm going to new listings, and over here I'll type in Columbus, Ohio, home of the national champion Ohio State Buckeyes. All right. New listings in Columbus, Ohio. Look at that. We are hard to get my little mouse on there. We're actually down 0.7%. Just no new listings. Like nationally, we're just not doing great when it comes to new listings in Columbus. Just not a lot of active inventory probably either. Let's click on that next. Yeah, active inventory headed straight down, only up 12% compared to last year. I can tell you there are homes out there for sale in Central Ohio, and if they're in good neighborhoods and they're priced right, they're moving fast. But there are a lot of homes that need work, maybe in some areas that were more speculative, areas of Central Ohio, particularly inside the city of Columbus. There are like trendy areas that really aren't trendy, but a lot of investors and a lot of people like piled in there and overpaid for crappy houses. And now a lot of those homes are sitting. But if they're good houses in good areas and priced correctly, they are moving. But overall, not a lot of active listings. So now we're going to look Now we're going to look at median sale price in Columbus, Ohio, $322,000, up 5%, just like nationally, up 5%. Will this end higher than 2024? I think it will. I think, Columbus, we're probably going to be in that 5 to 10% range when it ends the year. A lot of jobs coming to the area, a lot of tech work. You got Intel, Microsoft, Amazon, all like really, knee deep in the Buckeye State at this point. Plus, a lot of people are figuring out, hey, for affordable housing, low traffic, easy lifestyle, low cost of living, Midwest is where it's at. All right, now we're going to do another metro here in Ohio. We're going to do Cleveland, Believe Land. We're going to do new listings in Cleveland, down 6.4% year over year. Cleveland has no inventory either. Now we're going to do active inventory. That's down. That's a 4-year low in Cleveland, and it's headed straight down 3.99% year over year. So let's do median sale price in Cleveland, up 10%, $210,000. We ended last year in Cleveland at $229,000, up 14% year over year. Low inventory, no price crash, folks. Just how it is. All right, now we're going to do Cincinnati, Ohio. Cincinnati, Ohio, we $274,000 for the median sale price, up 9% year over year. No surprise. 2024 ended 285,000, up 10%. But let's look at new listings and active listings in Cincinnati and see what's going on. Yeah, new listings down. Look at this, down 13%. Now, it has been super cold in Ohio, so that's maybe why new listings are lagging. But down 13% for Cincinnati. That's just not going to work. Active inventory for Cincinnati, Ohio. Hard to see. It's right behind this black line. In fact, let me take off 2022. You can kind of see what's happening. There you go. So up 37% year over year, but it's headed down. I mean, with no new listings, active inventory is definitely going to suffer at some point. Although I will say, out of all the 3 major cities in Ohio, Cincinnati has the most by far. All right, now we're going to do Los Angeles, California. We're going to take a look at that and look at what's happening with, I would think it would show up first. The fire activity would show up first in new listings. So new listings right now are up only 2% year over year, meaning not a lot of houses are hitting the market, probably because the whole area is like in a state of emergency and reeling from what's happened. But let's look at active listings and see how that's doing in Los Angeles. So in Los Angeles, active listings up 16% year over year. It's headed down. It'll be interesting to see if the effects of the wildfires really take hold to that active inventory. Now let's look at median price in Los Angeles. Wow, straight up 10.48% year over year. I have no idea if that has anything to do with the fires. I doubt it does at this point. Probably too early to see it in the data. But I mean, homes in Los Angeles, the pricing has not crashed yet. It didn't end up in 2024 lower than 2023 either. They were up 5.81%. Again, inventory plays the role, folks. If there's got to have inventory to have a crash. Got no inventory, got no crash. We're going to go to the next metro, Indianapolis, Indiana. Let's do new listings in Indianapolis, Indiana, see what's going on. Down 14.7% year over year. That's crazy. Crazy. I mean, it's a 4-year low of new listings. I mean, just no choices. Active inventory. Look at that, headed straight down. It's actually now, what is that? Only up 0.32% year over year. No inventory. Probably prices are probably going up. Median sale price in Indianapolis up 6% year over year. It actually ended the year last year up 8% at 304,000. So right now, Indianapolis is more expensive than it has been the last 4 years to buy a home, it looks like, when you look at the median price. Just crazy. All right, let's look at Nashville, Tennessee now. Nashville, Tennessee. A lot of people think Nashville is crashing completely. It already has crashed. There's a bunch of shadow, hidden inventory that nobody's reporting. Find out if that's true. Up 1%, 1.8% in new listings. That's it. No cataclysmic, huge increase in new listings. Doesn't look like a ton of distress there, or you would see it in new listings probably. Active listings. Look at this. Active listings up a whopping 7.48%. Not a ton of active listings in Nashville either. Again, you would see it in the new listings and active listings. You'd see it like that. If there's nobody buying right now, like buying demand is plummeting. We see that in the numbers. We already looked at that. If that holds true and people are in distress and they have to sell their homes, forced selling, not motivated selling, distress selling. Where are these listings? I keep looking for them. I'm sure a lot of other people do want to buy a house. Where are they? Point me in that direction. I'd like to go buy. Look at that. There's just no inventory. All right, now let's look at median sale price in Nashville. Median sale price, $454,000 percent. So they're not up at all, but they haven't crashed either. Last year, Nashville, by the way, ended up 2% year over year in the median sale price, 458 grand. I keep looking for the crash in Nashville. Maybe it'll come someday. I'm sure it will. Everything has a cycle, but so far, not seeing it. All right, next is Michigan. So I'm going to do Detroit. Detroit. This one makes a lot of people mad. Detroit gets a lot of like hate because of the market there. Look at this. Just look at this and pay attention to that info. Down 22% in new listings. How you're not going to you're not going to destroy pricing if there's no inventory. One of these days I'm going to say there's a ton of inventory, I'm sure, right? Things change, but right now it's not. Look at this in active inventory now, down 0.22%. No active inventory. Not shooting up, not distress, not skyrocketing. Median sale price higher than it was last year. No surprise. Up 7% in the median sale price in Detroit. And look at that. Last year it ended up 7% in Detroit for the median sale price. 182 grand. That's the median sale price in Detroit. You're in Los Angeles, the median sale price is $958,000. So year over year, up 7%. That's how it ended. Now we're starting the year up 7%. Hopefully, for a lot of locals, prices start to normalize. But again, you got to have more inventory. Got to cause that. Okay, so what do you do if you're a buyer, seller, investor in real estate? How do you take action on all this stuff? Well, as a buyer, my first piece of advice is be patient. There are deals out there probably. Depending on the metro, you can actually see how median days on market, the time houses are sitting on the market, is increasing. So there could be opportunities out there, but you're probably going to have to be flexible. If you're hoping for the burning bush where it's like the perfect house, perfect condition, move in ready in the perfect school district on the corner lot with a perfect yard, and you're wanting a discount on that, good luck, probably not happening. But if you're okay with like a bad basement, needs a new roof, has a bathroom from 1910 or 1950 or whatever, and you have to update it yourself, no big deal. Put in some sweat equity and go out and get yourself a deal, but be patient. I would also negotiate like heck and don't fall in love with the first, second, or third house you see. Be non-emotional in it and be detached from your wants and instead focus on long-term objectives and your needs. If you're a seller, be aware that buyers may back out of deals because of unaffordability with interest rates and housing payments. So don't get greedy with your price on your house and be prepared that your home won't sell. Maybe in that first contract, you could risk a buyer walking away through no fault of your own. The inspection could be okay. You could have a great house. It could even be priced right. But if that buyer decides I can't afford the monthly payment, don't be surprised that they walk away. So be flexible and don't be blindsided by something like that. Go into the process expecting that will happen probably. Also, make sure you get with someone or do research around your area to know your entry price, because that's the most important part of pricing a home is where you enter the market. Enter it too high thinking I can just come down. You may end up lower than where it would have been if you just priced it at the market price or even slightly under market. That's the way most real estate markets historically have functioned, not what we saw during 2021 where people were just paying whatever. Those days are gone. So as an investor, I'm an investor. I can tell you if you are flipping homes, you better make darn sure you're flipping in the affordable price ranges. If you're trying to flip in the luxury market, maybe you have a system that I'm unaware of, but that's a market I stay way away from when it comes to flipping homes. Flip something that gives a new home buyer or an affordable home buyer an option. Focus on the basic needs of the house, the big systems, HVAC, windows, roof, foundation, electric, plumbing, the functionality of the home. Don't put a lot of bling into it because you probably won't get it out. Focus on affordability and practical homes and practical functionality. That's what you want to focus on if you're flipping homes. If you are a buy and hold investor, I have rentals. You better make sure that you understand the rents in the area and don't plan for rent increases. Be conservative with your numbers and make sure you plan way ahead when it comes to the rehab cost and improvement cost of the house or the duplex or apartment building. I know deal after deal, people I know personally that have anticipated incorrectly with buy and hold properties and are now suffering and really having a negative cash flow because they didn't anticipate all the capital requirements that were going to hit them with their rentals. You got to think those things through and again, be patient. I guess the more of the story is be patient as a buyer, seller, investor. Don't make a move without thoroughly doing research and thinking things through. So, obviously, a lot of buyers are walking away from deals. We've covered that today. There's another thing going on, and that is mortgage delinquency. You should probably keep your finger on the pulse of what's happening with delinquencies in mortgages and foreclosures. Here's my latest video on that. You can check it out right now.